The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the day a little differently today, folks, because I am getting ready to do a seminar over in London with Mr. Tom Hugard, and then shortly thereafter, we're off to Dubai, and we'll have some fun over there, but it's live trading, and then we have 2 days of teaching, so it's fun. We've got David Paul. I can't remember Steve's last name. He's another psychological trader. Wow. It's a way to start the show, Larry. Steve Harding. He'll never let me forgive that one. And David Paul. And then, of course, the feature of the show is Al Brooks, which is, he does a lot of he's wrote some technical books and is quite adept at his methodology that he used that Tom Hugard subscribes to. The first chart of the day here, I believe, I wanted to bring this up here. This was the chart of Nike. I wanted to bring it up again. So we have a question from Jeff over in Philly, and I wanted to get this chart up so we could take a quick look at it here. And then we'll get on to what I'm planning to do for today here. Jeff Hughes is supposed to be our guest, but the markets are so active anymore. I hope he can make it. He usually has. And then tomorrow we'll have Paula Douglas on the line. Anyway, he asked a question about the 135 pattern, and here's the one that we were looking at, a long time ago. But they're all the same. They don't change very much. They fail, but there's 0.2, and there's 0.3, and there's 0.5. 1, 3, and 5 should be within a day or two of being exactly equal. That's the harmony that's there. Okay, you don't have to worry about ABCDs or anything like that. You just look at the time counts. If the time counts are within, just 2 days, you got it made. As long as it doesn't exceed this last ratio here, as long as that doesn't exceed the 78% level, you're in business. Now look what happened here. After we had the big ABCD move down to here, that's when the news came out. It was the most bullish news that Nike had ever given. I heard that quote on Bloomberg. That's not me making it up. That's what I heard on Bloomberg. This was and boy, it was up. And where did it go up to? We were on the air that day, folks, because I remember one of the guys in there, I don't remember if it was Bo or somebody in the room, he was saying that, he was wanting to get in this stock to buy it. And I said, wow. I said, you got to be careful here, because at this point right here, you actually have almost another 135 pattern. As you can see there, the difference is we don't have the time count here, but we certainly have one thing that we really like, and that's that 61% retracement, and that would have given you an A, B, C, D, down to somewhere in here. Of course, we went flat and then lower, lower, and lower. So that's what I'm doing. Now, what I'm doing today I'm going to show you these are trades that we were planning today. I'm not even sure whether some of them have worked or not, but we're watching them very, very closely. Here's the one that really had our attention here. I wanted to get this up here to let you see it, because I think this is really important, what we're seeing here in the Dow Jones. Remember, the Dow Jones is much different than the NASDAQ and all the others. But this was done a long time ago, and of course our time over there will be we'll be finishing up here by the time we're trading over there. But you'll notice here that we made that 382 retracement here, and that the first one, it dropped well over 200 Dow points, and when you're only risking 75 and you make 200, that would have been a really nice profitable trade. Then it went up again, and then back down again. You could have had several trades in there. And then also what I did here this morning is to update it, just to show you that, we've been there so many times. Let me get this here, and we'll be ready to go. This is what I'm going to be doing for 7 hours on the 1st of April. April Fool, can you believe that? Anyway, you can see it's been 1, 2, 3 times that we did pop through there. We got up to that magical number. That magical number, you remember yesterday, folks, was 44.85. So watch that number today. We've hit 44.86 here just a minute ago. So that's what we're watching here in the Dow Jones. But actually, the one that we've been trading for today, hold on one second, has been the has been the E-mini S&P. And let's just get this up here to show the folks what we have. This was done a while ago, of course, because we're trying to do this live, and it's not MemberX here today. Let's move on here. Okay, there's the number. You'll see we're looking at this pattern early morning. It's just an 8-minute chart giving you the ABCD up there at 44.86. That's where the area, because the buy would have come in, down there quite a bit lower down there at around 66. But your sell signal up here is up there at 1886 with a stop at 1896. So that's how we're setting up some of these trades this morning to see, what we're doing. And we'll be doing that all morning. There's a couple others that I wanted to show you here, which we'll have time in a minute. But during this time, we're also going to be doing, the psychological part of this. David Paul will come in and give a speech, and everybody will, come together. You know what's the real the real testimony to this, folks? In 2019, on September 13th, 14th, and 15th, we had 115 people show up. And it was a really great, really, really, really fun days. You know that 62% of the people coming in on April 1st, 2nd, and 3rd are the same people. That's how much they enjoyed it, because we were actually doing live trading, and so I guess it's all right. I don't know. Anyway, it's a lot of fun to do it. So that's what's really amazing. Now here's another one that we've been watching so closely, and if you'll give me 1 second here, this is the one here. Oh, that's number 2 chart. Let me get number 1 chart. It's right here. Here's the one we had this morning. We had a situation in the gold market that lined up with everything that we like to look at, A, B, C, D, all the other things. And as you can see here, this is what we were waiting for. You can see the perfect A, B, C, D right up here at 1970. And so what we're doing now is we're looking at this on a 4-hour chart. This is nothing more than a 5-day rally into a 382. So the next step that we did to try to show the folks, how to put these things together, is go to the smaller time frame chart, okay? And that's what we're going to do next. And all I have to do now is find it. And I know I have it here somewhere. Oh dear, where is it? Where is it? That's not it. That's not it. Here it is, right here. All righty, and then we'll get this up here, and here we go. Now we're down into a smaller time frame so that we can see the entry point at what we're looking for, and we'll move this over and hit this, and here is a chart for the gold. And as you can see, the ABCD measured to 1971.50, and we were risking $4 on that. That was the high. I don't know if we took it out or not. It did make the first profit objective of $400 because we were risking $4, so we made $4. So we put that in, and then we put our stop just above the high for a break-even trade if it were to go long. If it were to go long. Wrong. Let's try wrong, Larry. Sorry, boys and girls. I'll be right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Jeff from Philly on the line now. Jeff, are you there?
Yes, I'm here. Good morning, Larry.
Good morning to you, my friend. What you had a question about the 135 pattern?
Yes, please. Actually, I have 2 questions, if that's okay.
You can take
the first
2,
one
you
is,
can take 3.
So this would be on a bearish 135.
Okay.
The 2 points on the bottom, the number 4 point and the number 2 point, is there a preferred orientation of those? In other words, like, does the 4 point have to be below the 2 point?
No. Jeff, when you do a 135, it's not a 1, 2, 3, 4, 5. It's a 135. It's a simple, really simple harmonic pattern where point 1, point 3, and point 5 have 2 characteristics in common. They are some type of a major high or low. In this particular case, it's a high. I posted a chart of Nike in there because Nike, Google, there's been a bunch of them, but Nike was the one that I remember the easiest. But if you have to have really good symmetry, in other words, the waves between 1, 3, and 5 should be the same number of days apart, like 16 days, 26 days, 52 days, whatever they are. But they can't be more than a couple days off because, and the second part is on that point number 5, it cannot get above the 78% level of point number 3. If it starts getting close to 90%, it's not going to be a 135 pattern, or it's a 135 pattern that has been broken. Does that make any sense?
Yeah, that makes perfect sense. So we don't have to worry about the 2 and the 4 point. They can be dangling any way they want.
Everybody thinks of 2 and 4, but it really doesn't make any difference. I got this from the Longstreet, Roy Longstreet and his son Bill, and they didn't even look at Elliott Wave at all. They had a hard time with it, basically, is what it was. But they could see simple harmony in ABCD, and that's what that was about.
Okay, I got that. And my other question is, I noticed the past few times you were showing 135 patterns on the show that you were comparing the length of the 2-3 leg and the 4-5 leg. And it seemed like maybe you have some requirement for those two to be somewhere near in length.
Yeah, they should be similar. They should be very similar. Because if they're off by a lot, then there's something wrong. The 135 pattern is the upside down version of the 3 drive to a top pattern. And on a 3 drive to a top pattern, Jeff, if you ever have to ask yourself the question that it's a 3 drive pattern, it's not. Because 3 drive patterns jump out you like a rattlesnake. I mean, they're just sitting there waiting to be sold or bought. But by golly, if it goes any higher than that 0.3, then you know you're wrong. That's the beauty of that. And that higher point is if it goes beyond 1.618 of that last leg, that'll tell you that you're pretty much wrong.
Okay. Okay, so we want those other 2 legs to be similar, but it's kind of a loose comparison, right? It's not like a specific ratio.
That you have to make a decision, basically, and loose would be a good word to clarify it. But remember, when we talk about loose, you have to say, how much do I have to risk to see if I'm wrong on this? That's the main thing that I'm looking at. Sorry, folks, that's a very good friend of mine calling that I can't answer. But anyway, what we'll do is you have to use common sense, Jeff. And the question is, if you look at a 3 drive pattern and you don't see symmetry between 1, 3, and 5, it's not right. And if you don't see symmetry, I mean, they got to look like they're equal. I mean, if you put a 3, you just have to look like they're equal, and that gives you your risk parameter. That's it. And,
okay.
And if any question, don't do it. That's the basic thing. Rule number 1 behind me up on that painting says, when in doubt, stay out. So if you don't see it clearly, there is something, that is, certainly wrong.
Okay. Okay, great. Well, thank you very much. I appreciate you taking the call and spending some time with me.
Did that answer all the questions?
For today.
For today. Hey, yes. Keep those cards and letters coming in, my friend. That would be good. Okay, now let's get on to the next one that we want to talk about here. Hold on one second. Yeah, you bet. All righty. So we're coming into some real interesting times here, boys and girls. Keep an eye on the old S&P here, because characteristically it has a little bit of trouble around this time of the day. All right, now let's move on. Okay, someone's asked a question about did I take profit? We took the 1 unit off in the gold, and we made $5 in that. So now what we've done is we put our stop at right near our break-even point at 1971. And if we get out of that, we're going to move on to the next one. But I wanted to talk just a tiny bit, folks, about what's going on this bond market. Folks, there is something really serious happening in the bond market, and very, very few people really see the significance of it. We have broken down badly. We're heading down. I've shown these numbers so many times that you just got to pay attention to it, folks, because what the Federal Reserve now is doing is they're basically feeding information that may be just a tad off from what's really happening. That's what's really going on. Interest rates are rising rapidly, and for years we were at 5% on the bond. Okay, that would put the bond down to about. Put it down to about 110, 105. That was for years. And then they ran it up to 170, which hurt the people that were on pensions and stuff. And but look at this chart, folks. There's our 135 pattern again. Gosh, I could have used that one. This is a weekly 135. And this was right at the 61% retracement, within 4 pips. Of the exact one, and now we have broken down below here. As you can see, we've given up. We're way below here now at this level. We're heading down to that 129. We're not going to make that in a day or two, but the Federal Reserve has got some type of a problem. The stock market's not looking at it very much, but by golly, there is a problem going on there somewhere. So let's remind ourselves that you got to be careful, because we hit 147, folks. When I posted this on Sunday, it was 152. And the notes are even worse. Well, because you can see what's happened to the yield curve. We're flat now, baby. That means recession usually, but not always. So remind ourselves that you got to be careful in these markets for sure. That's what we're watching. Hey, we got Jeff Hughes is in the house, and he's going to have 8 really neat charts to look at, which are always a lot of fun, and he does as good as work as there is out there, folks. I posted in the room today, there's a cycles program tonight between 6 and 8 New York time from the Silicon Valley Cycles Foundation for the Study of Cycles, Silicon Valley chapter, and they've got some really good stuff in that. If you like cycles, you can take a look at it, and if you want to, it's free. Just helping promote the Foundation for the Study of Cycles, which is good. So we're going to take a break here now, and we'll be back with Jeff Hughes of Alpha Insights when the break comes up. I'll be here tomorrow, folks, and I'll be here Monday, but after that, it's going to be sporadic. I think I'll be able to make the shows for Wednesday, Thursday, but definitely not Friday. I'll be a busy camper. Okay, we'll be right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Jeff Hughes of Alpha Insights on the line. Jeff, are you there?
I am here, Larry. How are you?
I am good. It's a real pleasure to have you here today, my friend. So bear with me.
Great to be here.
Well, I really look forward to it because your charts are just spectacular, and I like the technique. Oh, hit the trouble is you put the monkey on the thing here. You've got to be able to make sure that the monkey hits the right button. And sometimes, here we go. We got chart number 1 coming up. And I think the folks, this is about the Chinese internet stocks to buy. Go right ahead, my friend.
Yeah, so, one of the questions that came up over the past few days, just given the rally we had a week ago, was whether or not the Chinese market had bottomed. And, I'm a bit of a skeptic here, Larry, to be honest with you. A client or two inquired about the KWEB, which is the Chinese Internet ETF. And so we just took a look at it and did a little, cursory analysis. And all it really looks like to us is that the Chinese Internet stocks hit a bottom and rallied hard off those lows, up some 30% to hit their highs, but never really even challenged resistance, whether it be chart resistance or trend resistance, and were basically rejected by that 10-week exponential moving average. And in my mind, I take a look at the volume spike that we had that really set off this bullish engulfing, the weekly bullish engulfing last week. And it looks to me like we just exhausted all the buyers there. That was just a one and done. It was a response to some comments made by the premier of China that they were going to ally themselves with the West and behave. And, the thing about Chinese politicians is they're just like any other politicians. The way you know that they're lying is their lips are moving. So, time will tell whether or not they're really committed to these new changes. But I don't think the stocks are really telling you much more than the fact that they got so oversold that they were due for a bounce, and they just rallied right back into an area that's just short of resistance.
Okay, the next chart we're going to look at here, which I really like the caption that you have on this, ignore this at your own peril. I think the folks will like this one too. So why don't you tell the folks what we're looking at on this one here on...
In my opinion, Larry, the 10-year Treasury yield might be the most important chart for 2022. We topped yesterday at about 240, and this breakout above the classic patterned inverted head and shoulders base looks to project up to around 3%, give or take. And that key resistance level happens to be right in line with the very long-term 40-year trend. If we were to punch through 3% on a sustained basis, there's no doubt in my mind that the trend has changed to the upside, and we could start projecting 10-year bond yields up in the 4 to 5.5% range, looking out 24 to 36 months. And for most people's taste, that's too much too soon, and it certainly would have an impact on economic activity. There's no question about it. But more importantly, it's going to impair balance sheets, because all of these Treasury bonds are owned on the balance sheets of banks and financial institutions around the world. And if you take interest rates up to 3%, that's going to have a major impact on, to the tune of around 10% impact to the downside on bond portfolios. And the higher you go, the bigger that impact. We could be looking at 30, 40% drawdowns in the value of bonds. We're already at a record drawdown over the past 12 months.
The other thing that might happen, won't the increase in interest rates will mean that our Treasury has to go into print more just to pay the higher interest rates, doesn't it?
Absolutely. I mean, we're looking at near $30 trillion national debt right now, and that could be growing at an exponential rate in the not too distant future if 10-year bond yields continue to creep higher. And based on the inflation rate that we're looking at right now, there's little that the Fed and the Treasury can do to stop it.
Jed, this is long before. What year were you born?
65.
65. Well, in the 1976, bonds started trading. I think it was August or September of that year at the Board of Trade, and they came on the board. It was I think it was an 8% bond, but it was trading for. No, it was a 5% bond, and it was trading for $1 152, I believe, as I recall. No, what am I talking about? It was trading at 56. It was trading at a 50% discount to get it at 8%. So it went from 56 to 170 over those next 30-some years. But I agree with you. I think we're going to be looking at higher interest rates for the next couple of years anyway. Let's move on to the next one because they're all fabulous, and I'd like for you to tell us a little bit more about this spread that we're looking at. That I mentioned it earlier to the folks, but you might want to reiterate what this spread means.
Well, what it means basically is that you're seeing a flattening of the yield curve here. And if we were to invert, you can take a look back at the little red blip to the downside on the upper frame. And that inversion preceded a recession in early 2020. Now, it's really not likely that the Treasury market smelled the pandemic coming, but maybe they were worried about Trump's trade tariffs and things like that. The bottom line is that the bond market smells trouble right now. If you take a look at the 10-2 yield spread, it's only plus 19 basis points, and the 10-3-year yield spread is basically flat. It was negative on Friday, negative 1 basis point. Now, the 10-3 month, which is the one that you'll find in the LEI and all these other indicators, that's the real yield curve spread, and it's still plus 182 basis points. But the Fed has already indicated that they're going to be hiking upwards of 150 basis points this year, and so that's going to get us squarely to around 2%. This 175 to 2% range is their target by year end. And if the 10-year bond yield is where it is today, you're going to see a massive compression. And my guess is that the bond market is going to continue to widen with Fed rate hikes, and will continue to keep kind of a positive spread. So that's my view on yield.
Okay. Now, Jeff, someone's asked a question here in the den, and that is, do you follow the fundamentals? I mean, their charts are beautiful from my perspective because the technical picture tells a story, but are you following fundamentals as you go through looking at this? Is this part of your trading plan?
You can't ignore them, but I'm informed of the fundamentals, but I don't trade on them because they're not very good timing indicators. It's just an interesting set of facts that supports the price action, and there's nothing more fundamental to the market than the 10-year bond yield.
Okay, and second question someone's asking, are there any specific rules personally that you have, like your three main rules that you never try to violate, or do you have that in a format, or is that just part of your psychic?
Yeah, I have more like 10 rules that I try not to violate, and I try and review them regularly. I could send them out to your viewers if they want to reach out to me via email or possibly on Twitter.
There you go, folks. Hey, we'll be right back, folks, with Jeff Hughes, Alpha Insights. That's a good deal, folks. We'll be right back, Jeff. Stay with us, please.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back speaking with Jeff Huge of Alpha Insights. And Jeff, you want to tell us what you're looking at on the chart we're showing right now about Choose Your Own Odyssey?
Yeah, so, I think that the odds of a bull market and a bear market are about 50-50 at this point. And we've done a lot of analysis using Elliott Wave and trend analysis to try and conclude which direction this market's going to go. And it's really binary. There's two lines in the sand. There's a line in the sand at 4,600 and another at 4,300. And I think if the market breaks out above 4,600, as you can see on the left-hand side of this chart, that would really manifest itself into the bull case. And that bull case can be predicated on kind of the old Joe Granville methodology where, we start to see improvement in the AD line, the number of new lows starts to, improve, and, the market starts to trade above its 200-day moving average. And then he had another thing called on-balance volume that he created that, really speaks to whether the vast majority of volume is on the accumulation side. And what we're looking at here in the bull case is that, we run right up against that 200-week or 40-week moving average, and we can't quite get through it on a closing basis. If you look at the right-hand side of the chart, we've shortened up those moving averages, and we're using a 20 and a 30-week as opposed to a 40-week or 200-day. And what we're seeing is it better defines the trend, and the market stops to the penny at the 30-week simple moving average. That's the Stan Weinstein method. And Stan was a storied stock trader, built a multi-million-dollar fortune trading stocks using what's known as stage analysis, and it's all built around the 30-week moving average. Yeah. And when things are below the 30-week, you ignore them. When they're above the 30-week, that's when you get involved, and we're just not there yet. And so, the other side of this coin would be the bear case. If we fail to break out above that 30-week moving average and break sustainably below 4,300, then I think there's immediate risk to S&P 3,800.
Well, that's a definite possibility. I've heard 3,800 bantered around for quite a bit this season, so we'll see. We have another chart that's quite interesting. You want to tell the folks what you're looking at on option traders?
Yeah, ordinarily option traders buy more puts than calls when they're pessimistic about the future, and that drives the put-call ratio to above average levels. But what we've seen recently is that the put-call ratio is actually careened lower from its recent highs and is testing a 6-year uptrend. In fact, it broke through it last week and has now pushed back above since yesterday's upturn in the market. But if you take a look at the lower panel of the chart, we'd actually be looking at the put-call ratio for equity options traders. Those who are buying options on individual stocks as opposed to the index. And that's still kind of plumbing its 20-year lows right now. So, if you want to measure investor sentiment based on what they're saying, their survey responses are that we're very bearish. But if you want to measure it based on what they're doing, option traders are getting very aggressive on the bull side again. And that tells me that that investor sentiment just isn't as bearish as people say it is, because the actions speak much louder than words, in my opinion.
Well, the chart tells the story, that's for sure. All right, the next one we're going to be looking at is your sector analysis. And boy, you did a good job on that, because you alerted us a few months ago about how bullish that energy sector was. And my goodness, we hit $130 so far in oil, so that was a beauty. So you want to tell the folks what you're watching now?
Yes. If you've not been long energy, you've missed out on the entirety of the positive performance year to date. Up some 40% through today, is the energy sector, and outperforming the S&P 500 by over 45 percentage points. So tech, comm services, discretionary, all down double digits this year. Utilities and financials are flat. Industrial staples, materials, and healthcare down single digits, and the market down 6% on a total return basis through yesterday's close. But energy's up 40%. We believe that is still a trend that can hold in place, and we have a target for crude oil of $147. And if that target is achieved, we think the majors, Chevron and Exxon, will do very, very well. The E&P guys like Devon and Pioneer Natural Resources will do very well. But the companies that will do the best are the services companies. Halliburton, Schlumberger, and Baker Hughes would be the names that I would be focused on. They have the highest beta relative to the price of oil, and that's where I think the best possible performance will come from within the energy space going forward.
Jeff, I'll tell you, I can listen to you all day long. Maybe someday I will. Hey, listen, I put the thing here how the folks can reach you. You want to go slowly through this so they can hear how to reach you, especially to get those 10 rules. I think if they don't do that, they're missing a good deal. So
sure.
Go right ahead.
You can find me on my website. It's www.jwhinvestment.com. You can also follow me on Twitter @alpha_insights. I'm also on LinkedIn under Jeffrey W. Huge CMT, or just send me an email at jhuge@jwhinvestment.com.
Hey, this is great. Listen, I would like to have you on again in a few weeks or sooner. Jeff, anytime that you have an alert that you want to get out to the people, please let me know, and we'd love to have you at any time. So we'll always have room for you. So please let us know, because I know the things that you follow. I mean, folks, he's showing you a small part of what he does. So we should thank him for being with us, which we can hear the sound of one hand clapping, and no vegetables thrown here, so we're in good shape. Hey, thanks for joining us, pal. We really appreciate it.
Always a pleasure, Larry. Have a great one.
You bet it is. Okay, Jeff Huge, folks, Alpha Insights. Okay, we're moving on here to what's going on in these markets here. So we shorted that S&P, and we're not too far from our stop above that 786. The 786 on that S&P comes in, folks, at 99. The stop has to be at 44.03, and we still made a couple of bucks. We're up about $600 in the oil. Hello, operator. In the gold so far today, and now we've got to stop at break even. We'll see what's happening. We've traded it twice. We had two nice ABCD patterns in there, so that's what we're paying attention to. What I'm trying to do here today is to put together, some of the things like we do for the live trading, because in 7 hours of live trading, you have 3 or 4 trades maybe that you're on, but during that time you've got to give information about the patterns that you're looking at. One of the examples, of course, was this 135 pattern, the Nike that we brought up for Jeff in Philadelphia. But when you've got 75 people that are really actively involved in the markets, well, it's up to 85 now, and they want to hear more information. That's why we have 4 speakers, and it goes very fast, folks, for 3 days. Let me tell you, 24 hours, total of 24 hours. And then what I do, I follow through with them for the next month. I give them go to the 24/7 not 24/7, but the types of videos and emails that I send out, focusing on, certain trades. So, hey, we'll get back. We got to talk just a tiny bit about Bitcoin, and we'll be right back, folks. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Okay, we're back, folks. I posted a chart of Bitcoin up here because, as you can see, this chart is making a beautiful ABCD pattern up in here where that red line is here at the 382 level. In other words, taking out all the highs, that would be right around 48,000. That would be what I would think would be a false breakout. And then to go low. Why am I looking at this as a false breakout? Because if this bottom was really as powerful as it should be, we should be up here, not down here. So that's why we should be, way up in this area already completing this pattern, and right now we're not. So that's how I'm looking at it. Let's see how it turns out, but I think we're going to get below this line one more time to wash everybody out, and then it's going to have a heck of a run. So that's my 2 cents worth of what we're looking at here. Okay, now tomorrow's guest is Paula Douglas, and she's got some great stuff. She got some great news. I'll share it with you tomorrow, but she had something on her bucket list that got fulfilled. It was really, really quite neat. Anyway, let's move on here, and I wanted to bring one other thing to your attention here. Should the gold get above 1975, and I don't know if it will or not, but if it does get above 1975 in this next run, then I've got to look at it. I missed that last $30. I broke even on that trade, but that's you make a decision to do that. But anyway, these markets are really active, so that's all I can say. They're just really spectacular. I just can't thank the Lord enough for putting this situation together where we're having such volatility. Stop and think, folks. We're seeing swings of 30, 40 points in the E-mini intraday like we did 3-4 times today already. And you don't get that. I mean, when we started trading back on in April of 1982, it started April 16th. At the end of April, I think there was about an open interest of about 100. Leo had to pull us off the T-bill pit to get our pictures taken for the S&P pit. There were 4 people in it. 2 brokers and 2 order fills, no orders. The S&P was trading for 103. And then in August of that year, it made its major bottom. And that was it. And away she went. We'll see you on the flip side tomorrow, folks, with Paula T. Douglas, and we'll have some fun. See you later.